Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm a managing partner at 40 Capital. We specialize in a very unique mathematical approach to the stock market where we analyze the market and individual stocks in multidimensional space. And when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing indicators over the last couple of years. And when we combine both, we can essentially predict what the stock market or individual stocks will do in both time and price, and we can typically do it on multiple time frames, whether we're talking about short-term or long-term, doesn't really matter. Now, I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies, if you're familiar with Jim and Renaissance Technologies. So our primary goal as a firm is to do this. We essentially look for individual equities that we anticipate to increase 2x, 5x, 10x, or more going forward. So we were essentially looking for the next NVIDIA, Apple, Bitcoin, Tesla, and so on. And we do that by having the ability to, by using our software, to scan the entire S&P 500, run our three-dimensional calculations, run our timing parameters, and that allows us to pinpoint stocks that are about to put in major bottoms. And from that, we decide, well, we don't decide, we calculate how much higher they're going to appreciate post that bottom, and that's how we're able to identify such stocks. So today we're going to be looking at yet another one of our weekly individual stocks, which is going to be Amazon. Let me minimize that and we can begin the analysis. Amazon is one of our 52 mega cap stocks that we follow and we update twice a year. So this is the update for this particular stock. It's important to mention that the stock has been performing perfectly since our last update. We expected the top here, and then subsequently we expected a decline. The actual decline was a bit more than we originally projected. I believe we projected around 180 something, and then it ended up going into 165. So there was a little bit of a price mismatch. But structurally speaking, overall, the forecast is working out perfectly. Now, I'm going to describe this for those who are new to this, but basically the triangles you see at the top and the bottom of the chart are cycle composites. We call them cycle composites. And it's a very simple representation of a very complex set of mathematical calculations that go into the stock, into the chart, to be more specific, analyze it, calculate a lot of variables, and then project these cyclical outputs, as we call them. Now, the bottom composites are responsible for the bottoms, whether we're talking about the stock market or individual stocks, doesn't really matter, as you can very clearly see here on the chart, bottom, bottom, and the top composites are responsible for the tops. And we can, so these are the long-term composites, we can narrow down the stock market chart, and then we can see the midterm, short-term, and so on and so forth. What makes matter a little bit more complicated is we have multiple composites running in any given stock or the world stock market at any given time. So for example, I use Dow Jones as an example always, but for the Dow Jones we have two bottom composites and two top composites. So composites gets you very close to the actual top or bottom, let's say plus or minus a couple of months, depending on how large the cycle is. If the cycle is 5, 6, 7, 8 years, then the margin of error associated with any projected top and bottom can be as much as plus or minus 2 months. But if it's a shorter cycle, then we're talking about maybe 20 trading days, 10 trading days, such as that. So the lines you see on the chart, we call them cycle clusters. Now I'm going to show you how perfectly this particular cluster timed the bottom in April of this year. So these cycle clusters are basically, once again, we have the ability to use our proprietary cycles and scan the market, pick them out, and project them into the future. And what we found over the years is that cycle cluster, well, what we found is that important tops and bottom in the stock market typically occur not when any particular cycle arrives, but when a number of cycles arrive on the same day. So if we have 2, 3, 5, 7, the more the better, and the more powerful they are, the better. If we have powerful cluster, then rest assured there's going to be an important turning point arriving at any particular juncture. So composites get us into the neighborhood, and the cycle clusters or individual cycles give us the exact date of when any particular top or bottom will occur. So with that in mind, let me just very quickly summarize what our mathematical calculations suggest Amazon is going to do next. So let me remove these cycles here for a second, so it's a little bit more clear. So speaking in general terms, the exact projections are available with our service. We have a 30-day trial if you'd be interested in that. But basically what the stock, our calculations are saying in terms of Amazon is that this was the major top. This is a double top formation, which we shouldn't break above the 242, which is the top we saw in early February, I believe. And we are rolling over as we speak, and Amazon's going to decline quite substantially going into this particular bottom. So if we click on this cycle composite, we will see December of 2026 as the projected bottom. So this is going to be quite a decline for Amazon stock. Now, our calculations suggest there are two possibilities, and I'm once again speaking in general terms. We actually have the numbers to back it up, but for the purposes of this video in this forum, a 50% decline in Amazon stock price is going to be quite likely. So we are going to go from approximately, a little over $200 a share, $220 a share to 110 at the very least. Now we have at the bottom range of our calculations, it suggests that Amazon stock can decline to as much as $50 a share. Now, I don't particularly believe that particular target is likely because it would constitute a 75% decline, but we shouldn't dismiss it right out of hand because we do have a number of very powerful calculations converging at that juncture. So just keep it in mind. Of course, it's going to become much clearer as we move into this particular date of December 2026. It will become clear where the stock is going to bottom, because if, for example, if we break below this mid-range of approximately $100 a share and we penetrate a number of important mathematical support levels, and we're only left with, for example, I'm not saying it's going to go to $50 a share, but for example, if all of the supports are broken and we're left with only $50 a share as a final mathematical possibility, then definitely we should expect that price at that juncture. After this bottom is put in place, we anticipate Amazon to rebound quite strongly and quite powerfully in a V-shape kind of a formation, very similar to this, into this particular top, which is scheduled to arrive into 2027, 2028, and so forth. So that's the bottom line for Amazon. It's not necessarily good news. The double top formation is here. Just to very quickly summarize, the stock is expected to not break above this high of February of this year, and it's expected to decline quite significantly, at the very least 50%, but the possibility of $50 a share remains. So we're just going to have to recalculate once we get closer to this particular projected bottom. Okay, and yeah, so that's pretty much it. Once again, we do have a free 30-day trial associated with a service where we provide the exact date, exact prices of not only the mega cap stocks, but for the overall stock market. We have fast movers. We have a trading parameters for some of these stocks that we follow. So any serious market participant should be very interested in getting access. All you have to do is fill out a very quick form, no credit card, no strings attached, and you'll get access to our service for 30 days. We also have a webinar coming up on this Friday where we discuss a number of different things, including how we calculate the market, showcase our software, as well as we talk about the market and what the market is going to do going forward. Space is very limited. I believe there's 1 or 2 spots left, so do register as soon as possible. Link at the bottom of the description of the video. And finally, if you would be interested in learning about our mathematical work, the link is there as well. So that's it for today. Thank you very much for your time. We'll be back with another video tomorrow. Bye-bye.